Hey guys, Christian Farmers here, Tribeca Trade Group, and this is the P&L video for September. So in this video, we're going to talk about actual numbers of performance, what my performance was in my trading account for September, as well as I'll have the numbers for where I am year to date. And really, this is the review step of the process of trading, right? This is an important one. I do this video every month, and this is a step that you don't hear too much about, right? You're not going to hear this type of thing on Twitter. I don't know too many people. Probably I can count on one hand how many people that I see report their P&L on Twitter or just in general. But it is what it is, right? This step in the process is important because you want to be able to look at what you did and improve on your process. And reviewing your trades, both the winners and the losers, which I know nobody on Twitter has, but it's important. That is how you improve. And even I think also in a more challenging market, that is also how you improve your process, right? When the market is basically just doing one thing, right? That's great if you're playing that, and it's still not easy, I would say, but it's different when there's a more challenging market that really should get you to and help you get to a place where you become a disciplined trader and know how to take advantage of those situations and knowing when to back off. It's very, very important. So this month was different than, we hadn't really seen too much volatility since, for a few months. So different type of market, I think, in September, than what we were dealing with. And I think that I did at least, lost a little bit of the muscle memory too, where, being disciplined and being strict and following rules, those tend to lapse a little bit when we're not confronted with volatility, as the market is normally should be doing, right? The market ebbs and it flows, right? Over time, the market generally goes up, but smaller amounts of time, anything could happen, right? The market's going to go down some days, it's going to go up some days. Hopefully, in the way that I trade, I am looking for an uptrending market, and I will try to capitalize too when the market is sharp to the downside. But for the most part, I prefer trends, right? I am a trend trader. So we'll get into the nitty gritty of this, but risk disclaimer, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Let me get right to the raw numbers first, and let me just fast forward this down to where this needs to be. So this is the statement from E-Trade. I do the majority of my trading in E-Trade. I have backup systems, but really all my trading is done unless there's like an outage or something. But that's it. Like I keep everything in one place. So for the month, right? It said I was down close to 1%. Now I'm not sure. I've already received a question about this and I get it. The month of August, which again, I'm very pleased with my performance year to date, up 256% year to date. And even though it says that I was down in September, the end of year, it doesn't exactly make perfect sense. So I can't really explain this. I'm not inputting these numbers. This is, I give you these numbers straight from E-Trade. So maybe I need to give them a call and understand how the 1 month could increase, even though they're saying, so this is cumulative down here, and monthly it's saying that I was down almost 1% for the month. So I don't fully understand that, but it is what it is. That I again probably owe them a phone call to understand, but I'm not inputting any of these numbers. This is what they're giving me. I also, like, when I calculated the S&P by hand, they're off a little bit. So I think they must be off just a touch. Like when I calculate this is the NASDAQ, I come up with down 4.4%. So it could just be a timing issue. Maybe they're off one day, but they're not off a lot, right? So down 4.4%. Versus what they have, they're off like 40 basis points. And if you do this for the S&P, so I bet it's a timing issue, is my guess. But I should probably, I need to learn. So this is also off 50 basis points, right? They're saying that the S&P was down 3.9% for September. I'm seeing it on Bloomberg as being down 3.4%. Again, there's a little bit of variability here. And again, I think when I kind of did a rough calculation, my P&L was just about flat. They're coming up with, I think it was closer to down like 40 basis points. So anyway, these are small things, but I just wanted to make sure, because I already got a question about, hey, why is your performance up this? And it says that you're down for September. There must be some type of a timing issue, which is my guess. Bottom line is, I would have liked to have definitely would have liked to have a positive month, because I'm very competitive. If you haven't been able to figure that out, and I would have liked to continue with the streaks. Right, I had 1, 2, 3, 4, 5, 6, 6 straight months of gains, which is snaps. So it's not the big deal. The major thing is that when the market underperforms, I didn't do as poor. I outperformed the market, right? That should be I believe everybody's benchmark, right? So if you outperform the market, and I probably have more Nasdaq type stocks than S&P. So I think I'm okay with this. Again, I would be thrilled if I was positive for the month, but it is what it is, right? These are the raw numbers. So I put these in here. Same thing. I actually put the S&P numbers in there. But I think really the way that I'm kind of focused on this is, I give you this analogy every month, is that it's kind of like it's basically how Bill Belichick thinks too, right? In terms of football, right? At the end of the season, he wants to basically take 1 month at a time, win one game at a time, and that'll get him to the playoffs and hopefully to the Super Bowl, right? They always ask him, all the reporters, at the beginning of the season, hey, how do you think you're going to do this year? Do you think you return back to the Super Bowl? What does Bill Belichick say? He says, hey, we're concentrating on the opponent in front of us, and if we beat them, then that's who we're concentrated. That's who we're focused on. I think that's very important. I think that goes along in trading too. There's a couple things. I'm going to spend a quick minute here. It's important to not get focused on too much of the big picture, right? You want to make sure that every day that you're trading well, right? That you're not so much, and I don't want to say too P&L based. I think you want to make sure that you're executing well, that you're following your trading plan. And if you do that, if you stay focused on trading well, at the end of the month, it should work out for you, right? And I think that's kind of the goal, and not to be so fixated on what your year-to-date number is going to be. Worry about your trading philosophy, your system, being disciplined, and you're going to get there. One of the things too, which is kind of a little bit of a one-off here, but I think what happens is sometimes newer traders, they come into the room and they're like, hey, I want to make X amount every day, right? Can somebody tell me how to make this amount? I just want to make, whether it's $1,000 a day, just to use a round number. I want to do that every day. How do I do that? Well, I could tell you from being a trader for a long time, trading institutionally, as well as trading for my own account, which I am doing now purely, that it doesn't work like that in trading. You're going to have days where the opportunities are more abundant than others, right? So the goal here is not to force trades because you're fixated on making a certain amount every day. That's not how it works. You're going to have a couple days of the month where you're going to kill it if you're following your trading plan and and you're capitalizing on the opportunities. And you're going to have some days where there's just not a lot of opportunity in the market. And if you're forcing trades in that situation because you're fixated on some dollar amount, you're going to end up actually many times hindering your performance. All right. So, yes, win 1 month at a time. I'm talking about performance, but I'm also talking about sticking to your trading plan and staying inside the lines. So, that said, let's get into. I would say for my month of September, I kind of had two different months in 1 month, and I'll explain. The first half of the month, I had a basically a little bit of a drawdown, right? I was kind of caught a little bit. What's interesting too is I try in the trading room to basically say, that we knew that we were ahead of ourselves in terms of where the market went, right? I'll bring up the S&P here, but we knew that we were ahead of ourselves. We knew that it was pretty crazy. Right, and we capitalized. I really capitalized on this move. However, once we got into September, things started to kind of buckle a little bit, and all that froth that was in the market, right? We went up too far. We were overbought, right? These are all things that we've gone over in the trading room. However, I don't normally take off all my positions. So I got caught in this, right? Because same thing with the election. I'm not going to be taking off all my positions. Am I going to slim them down and prune them down? Absolutely. But perhaps I needed to do this a little bit more, you know, uh, so not to get kind of caught in this. The other thing that I did into this, right, was I basically bought the dip a little bit too early. The market was not done going down, and I was doing some buying too early, right? And the things that I was doing that were incorrect as I was using options and I was trading a little bit too large, right? I started to average down a little bit. Now, this could be problematic if the market doesn't snap back and you're in options. What it happens is it becomes harder and harder to get that money back in options because delta and gamma will actually work against you, right? Delta is the sensitivity or the how much the option is compared to the price of the stock, right? And as the strike price gets further away from the stock price, what happens is the gamma will start to move and your option will become worth less because it's further out of the money, right? So you need a larger move. What happens is you need a larger move than if it's not a one-for-one relationship, right? So it's a very important concept if you're trading options, right? The delta will move higher as the stock moves in the direction of your strike price. As the stock moves away from your strike price, what will happen is the delta will begin to fall. All right, so that's a very important issue and problem. If you're averaging down in options, you need a bigger move to get you back and to get those trades. So again, whenever we're talking about options, we talk about that you got to get the timing right and you got to get the direction right. If the direction is wrong, you're in trouble, right? And you need to manage the trade. And I put a couple examples up here from the beginning of the month. I was basically thinking that it would be kind of a shorter-lived dip, and I had bought some Q calls as well as Microsoft calls, and those did not come back. Right? Microsoft is coming back now, but I could tell you I still have on some of these Microsoft calls, and these are the October 230 calls, right, that I was in here, and the issue is now I've lost all this time value, and basically the stock is almost back to where I originally got it. But because I lost the time value and the stock was moving against me. So again, these are important concepts, and this is something that you will learn if you are trading options and the market goes against you. So trading too large and using options when the market is moving against you is not good, right? And not using, it's very difficult to use a stop price in options, especially if they're not far out, right? I think this was, about a month away, so less than 45 days. And those are what's known as short-term options, right? I know some people think short-term options are just weeklies. No, short-term options are also monthly options. It's very difficult if the market goes against you. And you could see this Microsoft, for example, the price, like if you would have bought the stock, you would have been fine, right? You would have had to sit through some pain, but the options will most likely, unless Microsoft happens to get out to 236 or something like that, the option price will not come back, right? It's just how it works. So I like to I like to talk about these losers because they are how you improve your system. What else? I should have done a little bit more hedging into strength, right? We talked about this several times during the month of September. We knew that one of the things that I kept talking about was that we were in a short-term downtrend, right? Just until about last week. So if we look at the Qs, for example, right, we know that every time that we tried to basically get out of this short-term downtrend, right, we were making lower highs. Here, so I talked about this in many videos, but here we tried to bounce here, failed. We tried to turn the corner here, failed. We had done this a number of times, as well as the S&P. Right here was also one here. Here's where we tried to turn the corner, but that was the situation that we were in. I think it's a little bit more visible in the S&P chart, but same thing, right? And I think if you were not timing this rightly, if you were not timing this perfectly, you had some issues. Or if you saw green and you were buying into green over the last month, you got clipped a couple times, right? Specifically in here, and then we would fall. If you thought, hey, I got a little bit of a dip here, and the bottom fell out a couple times. Here again, we tried to turn the corner. So this was very tricky. So if you were hanging in trades for a little bit too long, you kind of felt this burn a little bit, right? If you weren't. So again, tricky markets. And I would say this too, which I think I've already said, but when you're in this situation, I do tend to trade. I did have some short-term option trades on, like call spreads in Amazon, that worked pretty well. And I was doing that into weakness, and I would take those spreads off into strength. So those I was doing very well in. But there were some other trades that if you got caught in a couple option trades and this move started to take place, yes, it's a hit to your P&L. If you're caught in stock and you're defining your stop price, then this was not that bad of a situation for you. And I think overall too, I try to kind of stay out of options once I kind of grasped that, after the first week of September, that, hey, we got a problem with market breadth and we're in a little bit more than a 1 week dip. Remember, the market went down for 4 straight weeks. I began to kind of change my game plan and I basically stopped the bleeding, right? And that's basically how I kind of recovered. And the second half of the month was much more disciplined, tactical. Again, not every move. I did get caught in a couple of those days where I was having a great day and starting to feel really good, and then all of a sudden, like the market would kind of turn directions and it would not come back, right? I felt that as well, no doubt about it. But I traded much more disciplined and tactical. I also really nailed a lot of the rotation, right, which we typically see. Just as a summary too, it's, I think, 4 out of 5 years now that we've seen a rotation into value somewhere around between August to October, right? The market loves to rotate out of growth and into value around that time. I don't hear too many people talking about it, but it happens, right? And I've showed that chart many times of the relationship between value and growth. And it just seems to be that it's a rotation out of growth. And I don't know if it's because growth has gone up every single time a little bit too far, but it just seems to happen in September. So something to kind of watch for next year, of course. And again, it's 4 out of 5 years that that's happened, not every year perfectly. All right, but I did nail that rotation. Really started to play. I was involved in a lot of the material names. Right, I caught the chemical names like LYB. Right, we were in. I traded Caterpillar pretty short term, a couple days, and again, that was the right thing to do in that time frame. So. While yes, I went over some of the losers here. I also had a lot of winners to help me kind of fight back and get me back to where I needed to be. All right, so I've talked about a couple times, you heard me say stock versus options, right? This is a big thing. The reason why I'm so focused on this, which you don't hear too many people talk about, because I have had Septembers or Octobers where I did not make these adjustments, and the month of September, which is typically a weak month of the year, either September or October, they were more of a drawdown for me in past years. This year, I made the adjustment, and it was not a painful. I managed to kind of power through it and act much more true to my trading system. So I think that worked very well. And at the end of this, I'm okay with how this month ended for me, all things considered. So yes, I did slow down a little bit with the options. I only use those for tactical. A lot of day trades that I used options for, things like Amazon call spreads. So I use them a lot more tactically, right? Instead of putting them on for swing trades, right? And that's things. Those are a couple things that I did go over throughout the month. Best. So a few best practices. I think I have this on here from last month. Legging into positions. That's a big thing. If you are trading options or trading more options than stock, what I've learned over the years is not to go into a full size position with options. Why? Because they're so sensitive. There could be nothing that happens, and you could get into an option that could be, say, $3.50 or $4, and all of a sudden, just because it was the wrong time of the day, next thing you know, your option is priced at $2, right? So you have to be able to kind of leg in and say, okay, yeah, I bought some at $4. I'm also going to buy some at $2, right? Rather than going full boat in on $4. That's a lot riskier, right? So being able to kind of leg into positions, I think, is a best practice if you're trading options as well as stock. Leaving yourself dry powder is very important. Watching your risk first. I think more newbie traders, right, when they come in, and there's nothing wrong with being a new trader, but I know some of the faults that a lot of the new traders get into because that's what I'm here to do, is try to help newer traders. And sometimes I get the question, hey, how much do you think I can make a day? Hey, what do you think is the best stock that's going to be out there, right? I think as you grow into being a trader, you know that watching your risk, right? Watching your bankroll first is much more important than just straight up return, right? When you're trading, and especially with options too, you have to know what your risk is, and and being disciplined around that. All right, so my style, of course, is a trend trader. I just kind of threw this in this P&L video. Always, any trader, doesn't matter what level you are, you have to continue to improve and I would add, make adjustments. One of the things is, realizing when sentiment gets hot, right? We did see that at the end of August, unwind. So I definitely could have unwind more positions, right? That is something that is overlooked too. Like, you have to be cognizant of, in your day-to-day trading, not to accumulate positions, right? And from time to time, you have to make some hard decisions, right? Every once in a while, like I was in the video that I shot earlier, just talking about today's trading activity, which is it's the 1st of October. I'm very fixated on only holding the best positions, right? One of the things too I would add in here is that newer traders, they don't like to admit when they're wrong, right? There's always, it seems to be more often than not with newer traders, there's a whole ego complex, right? They're afraid that if they sell something and it's for less than the price that they got into, they're afraid that they have to admit that they're wrong. I'm telling you, that this is a concept that you need to get over, and basically be okay with selling some things at a loss, right? This was a very important concept when this happened, right? If you had to sell some things, which I did, a couple things I didn't want to sell in here, but that this was a better situation because it got my head clear in where I needed to be versus worrying about, oh geez, these positions are underwater, what if the market keeps going down, right? You start to grasp onto things like hope, right? Rather than what's actually going to happen. So if you have to sell some things at a loss, I'm telling you, when I do that, every once in a while I'll sell something at the wrong time and it rallies the next day or the next week. But doing so frees myself up for being super stressed and not being able to read the market appropriately because I'm biased, because I've got positions on that are messing with my head, right? And if you'd made those tough decisions in the beginning of this, right, you didn't get hit in all this stuff. All right, so very important is that sometimes the buy the dip mentality doesn't work, and that basically didn't work, unless you were super quick with getting out of these on the rips. But in the first couple weeks, buying the dip and putting on short-term option risk didn't work, in my opinion. Unless you're just day trading, right? Okay, so again, I've already talked about this one, I think. Or both of these, right? Don't just trade to trade, right? Make sure that some of the trades, like if you're looking for trades, as we are every day, they have to be good setups, right? Don't trade just to trade because you're fixated. Hey, I got to make money today, right? You could get yourself into a much worse situation if you're trading just to trade. So one of the things that I like to say too is, like, if it's jumping off the page at you that says, hey, this is a good opportunity, you're going to know it, versus, oh, I'm going to put on a position here because the stock's down, right? I think there's two different concepts, in that. And that kind of brings me to the last point too. I like this term a lot. Again, I'm borrowing it off of a member who's informed me that he said it first. But press when the wind is at your back. Right today, we saw a lot of opportunities, a lot of nice trading opportunities. They were jumping off the page to me. I felt like the wind was at my back. The market was doing okay for the most part. The indexes were in a little bit of a funky mood with the headline risk, but there was a lot of small cap growth names that were doing pretty well today, and I felt like the wind is at our back a little bit, especially with the market, moving out of this downward trend. Now this could change, so we have to kind of monitor that and realize that to back off when the wind is actually like in your face, right? When the market breath is really more on the negative side, right? When the breath is bad. And that can be included that not only was the market breath bad for a lot of September, but also the price got below value, and also people like to use moving averages, right? The moving averages are great to be a disciplined trader. So when the price dips below the short-term moving averages, I don't care if you use the 5, the 20, the 50, whatever it is. Respect it and make trading adjustments, right? There's several ways to skin a cat in this game. So it doesn't mean you don't need to use, I don't know. Some people, like I've heard some people use, I use the 18-day moving average or the 20. It doesn't matter as long as you're being disciplined. Whenever price goes below that moving average, I don't care what day moving average it is, as long as you're making adjustments and following the plan of what you set out to do, you're accomplishing it, right? I think people get too wrapped up in what the exact tool is, right? You have to make those decisions. That's the hard part, not just putting those indicators on your screen. All right, guys, so that is it. I'll say this as well. I didn't mention this in the beginning of the video. This is a hard thing to do, to report your P&L every month. If you are subscribing to any service, whether it's mine at Tribeca Trade Group or someone else's, and they're on Twitter showing you this is a great setup with charts and so forth, yes, chart setups, that's what we do on a daily basis, but that's only half of it, right? The trading. And so if you're subscribing to somebody, make sure that they're showing you their P&L, right? You're paying, you're a customer. Make sure that you ask me this. I report my P&L every month, but I always take questions too. Like, I'm happy to kind of tell people where I am along the month. I communicated that several times this month, and I was not in a good mood about it. But it's important to know what is going on with somebody who's running a trading room, whether they're performing well or if they're performing poorly, and if an explanation is into either one of them. How did they achieve superior results? How did they screw up, right? So it's important, and I think everybody on Twitter, in my opinion, again, it's not easy. That's why you don't see people doing it. But I think really people should be doing that. They should be reporting what their stats are if they're going to come out and tell their 100,000 followers to get into a trade because it looks really good. There's a lot more to it than that. All right, guys, I'll leave it there. Thanks for watching the video, and I look forward to. I think we're going to have I think this month again is going to be a bit challenging. I think it's going to be choppy from time to time, but I also think there's going to be a lot of good trade setups. So looking forward to it, guys.